Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. I'm Ryan Nauman, the market strategist here at Zephyr. I have another really fun and entertaining show lined up for us today. The wealth management space is as competitive as ever, and it's evolved greatly over the years. So it's more important than ever to create an enhanced client experience that includes aligning investment solutions to your client's investment objectives. But the key is being able to do it at scale. Well, I have on an industry expert to talk about this and much, much more. But first, today's episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions. All right, let's go ahead and get started. Enough from me and move on to the start of the show. I'd like to give a warm welcome to Joe Mallen. Joe is a CEO at Modelist. Joe, thank you so much for coming on. It's an honor to have you on the show. Can you please tell us a little bit more about yourself and Modelist? But first, before you get started, feel free to admit that part that you're a University of Minnesota grad. You can maybe start right after that.
I was joking when I first saw your shirt. It was very intentional.
Yeah.
When Ryan and I first met, we quickly arrived at the Wisconsin-Minnesota rivalry. So had I known you were doing that, I would have worn my Gopher gear.
Yeah, I wanted to keep it a secret. I didn't need any more, maroon in the screen or anything. Yes, and Joe too. Before if you talk about Minnesota to Wisconsin rivalry throughout this conversation, let's remember this is a family-friendly show. So let's keep it
Okay.
friendly, and then we
Yeah.
will maybe we'll get you and maybe Alex on another time, and we can do an after dark episode.
Yeah. Yeah. No, that would be great. The PG comment I can make is both my kids know that Bucky is yucky, and that's all they need to know. But yeah, no, thanks for having me. Joe Mallen, CEO, Modelist. We're a relatively new player in the model portfolio space. Started the business a little less than 2 years ago. Took on first clients at the start of 2024 after getting approved as an RIA. And simply put, we're trying to bring the best of building models inside of your advisory practice and blending that with the best of outsourcing to a third-party strategist or model marketplace or provider. And that's kind of the goal for why we built what we did. We just saw a massive gap in the industry. A lot of advisors, understood the pitch of, this is probably not the best use of my time to be building models in-house. I want to grow past my 50, 100 million in assets. I look to scale. But when I seek third-party options, they don't allow me any flexibility. They don't let me to retain those funds I have a strong preference for. I feel as though, or they may feel as though they're becoming a wholesaler of a different, fund provider company. And those solutions on outsourcing range from free to, pretty expensive. And we're like, you know what? We've been in the space, our team has been in the space for a very long time. What if we just took all of what we think are the tricks of the trade, the IP, how to think about fund selection, how to build a narrative that works? What if we just built a platform around all those ideas, give them directly to the advisor with transparency, honesty, and said, let our platform kind of help build and craft and mold the clay for you, what you want as an advisor to sell to your clients. And you retain the brand, you retain the identity. And so we're looking for really to work with entrepreneurial type advisors to help them build a model portfolio set. So I'm sure we'll dive in more, but that's kind of the passion behind everything we were doing.
Yeah, that's perfect way to start, Joe. And it's interesting, when I started in the industry, gosh, aged myself here 20 years ago, models were around, um, obviously, but not like they're today. They've really evolved. But also, what was interesting back then, you could charge 1.5% on investment management tasks or responsibilities. You can't do that today. You'll get laughed out of the room. So what you're offering really, fits that role.
Yeah, you're right. And that's kind of, I've been in the space a similar amount of time, like early 2000s and even mid 2000s. There were a lot of third-party strategists or tactical active mutual funds being launched that, wow, this is a really cool concept. And, we're buying sectors or buying funds, and then we have some sort of mechanism to get out or tactically rotate amongst them. Um, but at the end of the day, when you look under the hood, it, none of that stuff's really that complex. But it can be powerful. There's a reason to follow some of those trading signals. So you're right. And we're just trying to find and kind of ride that trend of lower cost, higher transparency, high level of customization. And we just think that's a segment of our industry that hasn't fully quite adopted it yet.
Yeah. We're going to bring up that shortly about transparency and customization. The folks at Zephyr, we've done a lot of research, talked to a lot of people, and customization is so important today in the investment management piece. And we're going to talk about that shortly. But let's take a step back. You mentioned model portfolios. Um, let's just broad, in case people don't know, what is a model portfolio? How do you classify one, Joe, at Modelist?
I think a model portfolio is more a operational adoption or infrastructure that an investment advisory practice chooses to take on. Many advisors, prior to having technology, they would manage each client account one-off. And that might be just giving them some mutual funds or ETFs, understanding their risk profile. You give it to them, and maybe you think about it once a year. The evolution, a couple of things that have happened. One is really just technology. So custodians all offer them, TAMPs offer them now. There's third-party trading platforms that give you the ability to create a model. And all this means is you now have, call it 5, 10, 15, 20 portfolios that own the same tickers, same funds, and the same allocation. And now you're not crafting something custom to each client account. You're rather putting your client account into one of these models. And then the other big, I think, industry change that occurred was free trading of ETFs and mutual funds and stocks for that matter. It made adjusting client accounts and tracking a model far more cost efficient. No longer are you paying $20 to sell 3 shares of an ETF. I think those two trends really, have created this. It's almost an industry standard for most advisors to run model portfolios for your client base. I don't know many advisors over a few hundred million that aren't at least running models for the majority of their business. And many of the folks, prospects we're talking to are in that 50 to 100 that might be at that stage of, oh, I know I need to start running model portfolios. Can you help us do it?
Well, there's a lot of benefits to them too, right? And you talked about customization. I feel as if you're not offering customized investment solutions, you're losing. That's what clients demand. And going back to the initial like model portfolios, I think there was, maybe a little bit of customization. Joe, if you were moderately aggressive, I was moderately conservative. We had the same investments, but maybe just a different tweak of risk tolerance and allocations. But now it's evolved to now you can really customize these model portfolios. And why is customization so important? And do model portfolios really allow for that fully customizable solution?
Yeah, customization's a funny word because it can mean lots of things. You can have minimal level customization and still call it customization, or you can have deep customization. So we sometimes joke that a lot of providers of other models that tend to stick by the 10 or 20, 30 solutions they make available customization, but it's really editable. I think that's a better word. You can take what we gave you and you can swap out via your own effort some options and customize it.
Mm-hmm.
I don't think that's really fully customizable to the definition that we're trying to make it. What we're saying is let's take a framework for a model portfolio and try to design how it works. what makes our 15 asset allocation or 15 asset class allocation model evolve? What mechanisms allow us to overweight growth, value, US, duration, credit?
Okay.
And that's where we build a recipe. And the recipe itself is really customized. So we consult with every practice we're talking to and say, what do you think about the markets? What are your preferences? Do you think, protection or income are things that
Mhm.
should be incorporated into your investment narrative? And then we build that story for them.
Okay.
And then when it comes to the securities that we hold within the model, we're very agnostic. We're not legally a fiduciary, but we want to have a fiduciary type responsibility here to say no conflict. We have no product. We want to build what is best for you. That might mean retaining funds you have to mitigate turnover. It might mean going really low cost. It might be introducing that active fixed income fund that you've been a client of for 20 years and you really enjoy their outlook. All of those things come into our customization. And to take it one step further, and what we see as the real frontier of this space is now that you have models, right? We talked about the efficiency, the scalability in your practice with having models. What if on a per client account basis, you could swap out that fund for, say, the underlying stocks within it? What if you, instead of owning a municipal bond fund, you could own direct muni bonds inside of your same account? What if that allocation was actively managed on a daily basis for tax overlay, for tax loss
Mhm.
harvesting? All of these things we think is the forefront. And that's what we're leaning into hard right now. Not just customization of ETF and mutual funds,
Yeah.
but rather encouraging advisors to take the models, the thought leadership, the top of the house view, and applying it to their $500,000 account the same way they're doing it to their $5 million account, but adding to it or modifying it or customizing that $5 million account with the needs of that type of client.
Interesting. You about those, owning the individual names, direct ownership, at Zephyr, we, have the PSN SMA database, so we're big on SMAs, and the big benefit there is you have direct ownership of those underlying securities, which provides a lot of benefits. Namely, number one is the taxable different strategies or tax strategies you can use. So it's really interesting that you're doing in a model portfolio,
Mhm.
which provides more additional tax efficiencies.
Yeah, we think that where the industry sits today and what we see many forward-thinking advisors doing is having their solution for their model portfolios, and then they have their direct indexing solution. And I would say if you talk 95% of them I talk to, we run our models through X platform or we do it in-house and we use Y platform for our direct indexing. What we're trying to say is, why not get all of the benefits of that direct indexing inside of your model portfolios at a cost that is lower than both of them separate? That's really the economics game and the structure game that we're trying to encourage advisors to adopt.
Interesting. You brought up it being scalable, doing, making your practice, your financial advisory practice scalable, which is very important now that fees are coming down on investment management. But we've also talked about customization. How can you create a customized investment solution that is very customized to me and you, but also make it scalable across your entire practice of, say, you know, 500, 1,000 clients?
Great question. Tech helps.
Yeah.
What we do from our end is a lot of what we're calling the customization and then deliver it to the advisor. So when it reaches their hands as far as the models, it's pretty consistent. So there's kind of two levels of customization. There's the customization of the models to the practice. That's what we're doing. And we've built tech to enable us to be able to do that at scale. And then when it comes to how do I implement these models for my clients and add a layer of customization to each of their household specific situation, that's where the direct indexing technology can come into play. So we like that setup a lot because it creates a lot of scalability, a lot of efficiency, high level customization. And that's where I spoke about not having two platforms. Because if you had two platforms, what you can enact, and it's not scalable, is models over here, but then that ultra high net worth client of yours is on a different program and a different technology with a different piece of reporting. We think those should be the same. And that's how we've created scale at the end client level, is to be able to leverage their technologies and get these technology providers in the direct indexing realm to think about their offering a little bit different. Why not go and get those smaller accounts, which you were otherwise ignoring, because your technology is incredibly capable of handling them. And it's among the easiest types of things for you to handle because your technology is so powerful.
Mhm.
So I hope that answered your question, but it's really in the technology, and you see demos of these things. It blows your mind away of how cool it is to say, give my client what I know they need, but now let's tinker with it for them and really blow them away with the level of sophistication we can do to manage their account. And that really emphasizes your value as an advisor because you're doing things that they could not do themselves.
Yeah, technology is, I mean, really at the forefront, the base of the evolution of the space. I believe in, and it's just with AI moving forward. Who knows where the end of the road is, there. You know,
Mm-hmm.
you talked about, we talked about outsourcing and, customizing and all this good stuff and, making the practice scalable. But what are some other things that financial advisors should consider when incorporating model portfolios in their practices? You touched on a lot, but maybe there's some other things that maybe we don't think about.
As far as what the advisor should think about.
Yeah, when they want to, when they're considering incorporating model portfolios, maybe they're still
Mhm.
doing it in-house and they're looking to, outsource or incorporating model portfolios from a firm like Modelist.
Mhm. I would say be careful of the route you take and be cautious of fees because
Okay.
there's many platforms out there that deliver model portfolios. It's become a pretty commoditized business.
Okay.
You can find XYZ model manager available at many different locations.
Hmm.
The most important part, and this is where we really try to help advisors, is what we're delivering is the intellectual property of what to hold, when to hold it, why to change it, etc. Other firms are doing that, but it's not, it's in their own story and their own brand. But sometimes the way you get there can be through a TAMP, which charges an overlay fee, and then you got a 30 basis point manager fee, and then you got the expense ratios, which you can't control, which could be another 30, 40 basis points. And ultimately now you've just really eaten into your client's potential return by adding fee over fee over fee. We think each advisor, they all have their own, tech stack. They may have built something, they may be using a TAMP. And we think understanding where and how to execute your models is very important because there could be a more direct route. You could go direct to the custodian if you are single custodian.
Yeah.
You could use a platform that just does outsource trading because you might already be paying for the rest of your tech stack. You might already have a full blown TAMP that it doesn't make sense to use a different TAMP to do the trade execution.
Mm.
So that's the word of caution, I would say. And the way we're trying to accommodate that is really meet advisors where they are. So we have the model, we have your name on it, we have the content. Now, how do we give it to you in the least frictionless or the most frictionless way at the lowest cost for what they need? They just need the models. We can put it right where they need it to pick from and allocate to. If they want the fancy things I talked about with the direct indexing capabilities, we can deliver multiple options in that space. So,
Yeah. You brought up, you can put the firm's name on that model, which I think is really important because financial advisor, and especially maybe the older generation financial advisors, or that have been in the industry, say 10, 15 years, they like the investment management piece of the practice and have a hard time passing it on, right? They feel that's where the value is that they add. So I think giving them that maybe that security that your name is on this, you're not losing control. This isn't like Modelist product. We're just giving you, you know, that intellectual property that you talked about.
Yeah, it's a great statement because there's kind of two trains of thought. There's the folks that have always had that desire to have their name behind their investment management solution.
Mhm.
And there's many people that don't want it. They'd rather say somebody else's manager. Do you know who they can fire then? That third party manager. It's
Yeah.
hard to fire yourself. But we have really two statements against that, or to go along with that. One is many surveys of why your clients are paying you, call it the 1% they're paying you as an advisor. The number one thing they think they're paying you for is for investment management. It's not estate planning. It's not financial plan. It's for investment management.
Mhm.
You run a threat of if you constantly outsource to a place that they could just go get themselves, um, you run a risk that they could actually go move the assets.
Mhm.
And secondly, we think building your brand behind the model, but almost, you can put our names on your marketing deck and our bios. We have a really accomplished team at Modelist that have been doing this for a really long time. Ken Peterson's our PhD on staff. He was at places like Bridgewater and Santander,
Okay.
brilliant mind in our space. So we say, leverage our experiences in our bios, but consider us partners, consider us,
Yeah.
part of the team. You know what? And if we fail to meet your expectations, you can still fire us. You're not going to lose your client. But you're now going to your client and saying, I'm still calling the shots, but I've elicited experts in this space to help me build what you need for you as a client, Mr. and Mrs. Smith. We like that setup. I think it kind of, you get a little bit of both trains of thought, to the advisor's benefit.
Yeah, I think that's a great because like you said, it should be a partnership, right? And that seems to sound better than I'm just giving it all away, letting them do it. And plus, you got the regulatory issues too that maybe they don't have to worry about. We talked a lot about benefits. You brought them up, but are there any other benefits in incorporating model portfolios in financial advisory practices?
Mhm. We talked about the scale, we talked
Mhm.
about the cost, we talked about the brand and the identity, brand identity, opportunity for growth. Um, what am I missing? The ability to, customize at an individual account level, the access to individual securities or individual municipal bonds. The one thing I would say we probably haven't addressed is maybe at the aggregator level. So
Okay.
I know the most of this conversation is focused on, hey, what is the benefit of models for your practice?
Yeah.
But speaking to aggregators, we found what we're doing for individual advisors is very attractive to them because the setup is often we have our aggregator entity. We want to recruit advisors to our platform, or we want to acquire advisors to our platform. We offer the ability for them to continue to be rep as PM, but our preference is for them to use the home office and research team. So home office research team likely offers their own models.
Yeah.
And I know this isn't your question about the benefit of, you're getting the benefit of models by using the home office research team, but the same problem exists as we talked about before. Now you're selling somebody else, you're not building that brand enterprise value. What if you don't agree with them? What if there's some things? So we try to say there's an in between. There's kind of the guided rep as PM approach where we can create an ability to partner with that home office. They can do the execution, they can do the
Yeah.
trading. We'll just work with their end advisor to build the customization, and it works for both parties. They
Mhm.
can continue to offer more services to that end advisor. We can just bridge that gap. and really scratch the itch of wanting to have something under their entity, but deliver it through the platform that makes the most sense for their aggregator.
That's really interesting you brought that up because we keep hearing, very rarely, like on wealthmanagement.com or any other media, you're hearing about an independent advisor going to a wirehouse or big broker dealer. It's always the other way. And aggregators are getting to be so competitive and popular, they got to help separate themselves apart from their competition and offering, a third party model strategist like yourself just makes them more attractive.
Yeah, and those are the folks we love to partner with. In a way, we're almost licensing what we do through them, and they can have an instance of Modelist at their practice.
Mhm.
We want the future of this industry to be that person leaving a wirehouse asking the aggregator, do you have Modelist available to me, or do you have that way for me to build my own custom model portfolios with some input?
Yeah.
That's what we want the future to be.
Yep. We talk a lot about the generational wealth transfer and younger clients and trying to connect with the younger generation of investors. Does model portfolios help? And, those younger generation, until the wealth transfer happens, may not have a lot of assets right now at the time being. Do model portfolios really help, bring those clients in, the younger generation, until they bring in wealth?
It could, I would say the the ability to customize at the advisor level can allow for different types or um, regimes of models. I don't know if that's the best word, but
Hmm.
for maybe the older generation that's focused on dividend yield and
Yeah.
avoiding taxes and things like that, we can create a model of portfolios that's really stable. It's high income generating. We can also create models that are really sexy, and that might be for the next generation coming
Yeah.
up that might be more interested in Bitcoin.
Yeah.
And we say, you know what? Personally, I'm not a huge fan of Bitcoin, but if you were to play it, what if you used a trend following signal on it? Or what if you vol weighted it with something like gold? And these are all these strategies I'm talking about that we give away to our advisors.
Yeah.
And we can help them craft to their clientele something that's very exciting and
Mhm.
appealing to them. So I don't know if it necessarily like functionally helps with the wealth transfer generation to generation, but it helps offer solutions without going to multiple providers
Yeah.
that appeal to the different type of clientele in your practice.
Enjoy. Yeah, that's great. Let's finish today's market very uncertain. We've had a good bounce here off of market lows a few weeks ago, but market uncertainty is still there.
Mhm.
Volatility is still there. And you talked about at the open very customizable portfolios, model portfolios where you can customize it all the way down to the individual securities. What role can you leverage, or how can financial advisors leverage model portfolios when you're trying to deal with today's uncertainty? Because to me, a lot of times model portfolios, you think you don't have a lot of flexibility. It might just be mutual funds or ETFs. In this market uncertainty, you need to be nimble, maybe a little bit. Is that maybe a misconception, or do they play well in this market uncertainty?
They do, and some of that isn't even really the model. It's the kind of top of house consultative investment management view that we offer. And I'll give you this example. We proactively reach out to our advisors when markets are getting a little crazy, getting a little more volatile, and giving them narrative to share with their clients.
Okay.
It really reduces any inbound requests that we have because you're over informing our advisors and they're over informing their clients. And I think, you know, part of what we do in designing models at the front end is having the advisor understand how they work down to the signals, having trust in them that they know how it should react to various type of market environments and
Mhm.
feeling comfortable. That gives them a different mindset in when they're communicating with their clients. Because I think the clients, what they want to know and the advisor wants to know from us is that we're confident in what we've given you.
Yeah.
Here's why, and here's how we explain it. And what we're not doing is saying we've built the best mousetrap to tackle every single market situation, or we guarantee we're going to outperform in this market or that market.
Mhm.
There's a lot of people out there doing it, selling fancy back tests and things of that nature. But once they don't fulfill those
Yeah.
perceived, um, outcomes, you tend to lose clients and you tend to piss some people off. So we think over communication, honesty, transparency, building a series of portfolios that you understand how they work and exactly why they work puts that advisor not in a nervous position. It puts them in a aggressive, confident position to be able to communicate with their end client.
And it's a perfect way to kind of wrap up this conversation. It goes back to the primary trends in this industry: transparency, communication, customization, providing that, being proactive about it. So you're right, you're not taking those inbound calls and on your heels, you're staying proactive and staying on top of it.
Mhm.
So that's good.
Exactly.
It's good. Joe, I don't know if we've ever had a civil conversation between a badger and a gopher in a very long time through 30 minutes. So it was
You've
good.
moved away though, so
Yeah,
you've softened up, I guess, a little bit.
there you go. Well, also, I tell people this, Joe. I think told you this when we were at Exchange. I'm a huge Go Badger fan, but I wasn't smart enough to get into Wisconsin, so I had to go to St. Cloud State, which just brings up a whole another conversation there.
Yeah, we could start talking hockey if you wanted to,
Yeah,
but
there we
that's
go.
that's for a different podcast.
Yep, yep. Joe, thank you so much for coming on the show. As expected, it was very fun. You dropped a lot of great insight, good stuff there. Where can our audience get more information about Modelist?
Yeah, check out our website. It's www.modelist.me, M-E, so modelist.me, or reach out, hello@modelist.me. Find us on LinkedIn. You'll either land at our site or some, Turkish fashion magazine, I think, which is fun. It's I see the viewers of our website, and it's a lot of industry investment professionals and a lot of people from Turkey, oddly enough. So,
Interesting.
yeah, if you're on the
Interesting.
Turkish one, that's not us. But
Well, there could be worse. Could be
mhm.
worse. Awesome, Joe. And I'll put that information in the show notes to where they can find you at Modelist. Thank you so much for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other episodes on the Zephyr YouTube channel. And lastly, please give us a follow on the Zephyr LinkedIn page to learn more about Zephyr, keep track of our research insights, and then all of our updates, such as this episode. Thank you very much and have a great rest of your week.